Hi, my name's Chris Reed, Managing Director of Neometals Limited, and welcome to my quarterly update. Neometals is focusing on commercialising its technologies for the sustainable production of critical materials from high-value waste streams. And now to our flagship operation, which is our lithium battery recycling business, Primobius GmbH. It's an incorporated joint venture with global plant builder SMS Group. We had a fantastic quarter, so we were constructing the spoke plant at Mercedes-Benz Kuppenheim. In January, we received the purchase order for the Hydromet refinery for Mercedes-Benz. What we did is we issued a back-to-back purchase order with SMS Group, and we have started construction of the Hydromet refinery. The Mercedes-Benz plant is an important validation of our technology. It will run through till approximately the first half of 2025. Following on from the successful commissioning and operation of that, it will trigger the offering of our first commercial plant, a 20,000 tonne per annum plant, to Stelco for deployment in North America. Primobius has also advanced discussions with other participants in the battery supply chain, and I'm pleased to say we received our 4th national phase patent. We have 13 still being prosecuted. On our pre-commercial technologies, particularly the ELIBE project, during the quarter, we announced that we ceased negotiations with Lithium SA for the advancement of the technology through to the demonstration plant. We were unable to agree terms that were in the best interests of RAM, which is obviously an incorporated joint venture, Neometals 70%, Mineral Resources 30%. What we have committed to do is to complete the remaining pilot plant test work and engineering cost study, which should start imminently and be completed by the December quarter of 2024. With respect to our vanadium recovery project, we've advanced discussions with potential licensees of the technology. The previous quarter, we advised that we were not making a positive investment decision on using the technology as principal and deploying into Finland. We've chosen to prosecute the technology under a technology licensing arrangement rather than deploying it as principal, as we advised in the December quarter. And this is really due to the vanadium prices being down 50% year on year. In terms of research and development, I am pleased to say that we have commenced pilot plant test work on a novel technology to recover precious materials from industrial waste in the US. At the time that I'm recording this video, that is complete, and we look forward to the results. We've taken the strategic move to diversify our technologies into including precious metals. We think it's a perfect complement to diversify probably an over-concentration in battery materials. Battery materials and precious metals are uncorrelated, and we're excited at this opportunity because we have the potential to actually use it as principal rather than technology license. With respect to our upstream mining projects, Barrambie, essentially we've had that on care and maintenance with minimal tenement maintenance activities, and we are preparing that for a sale process. In terms of Spargos, during the quarter we received the results of a review that indicated it does have, unfortunately, low prospectivity for lithium. Accordingly, we are looking to divest ourselves of that asset. With respect to the market outlook, the global geopolitical and macroeconomic outview is pretty volatile at present, and there's really not a lot of confidence. Certainly in the battery materials sector of the market, the commodity prices for our battery materials have been flat, and we're looking at a recovery, but at the tail end of this year, early 2025 is sort of the best available information. In terms of the cash balance, we've approximately $14 million at the end of the quarter. We have $17.3 million in investments, receivables and inventory, and no debt. I think most importantly, we are cognizant of what the general market looks like. We've instituted a significant austerity program. What that's been able for us to do is to reduce our corporate admin and evaluation expenditures from $6.6 million in the September quarter down to $4.3 million in the December quarter and $2.6 million in the March quarter. So we are right-sizing our workforce. We've gone and renegotiated with some suppliers to strip out costs, and the board has reduced its total director's pool. We appreciate the support from our patient shareholders, and we look forward to delivering you some very good catalysts in the coming quarter.